All right. Hello, everyone. Thanks so much for tuning in. So, hopefully, you didn't get caught on the wrong side of this GameStop trade. And, if you'd been listening to me, you probably wouldn't have. And all you got to do is check out the videos to see that I'm not lying. And, this like roaring kitty dude comes out. And, maybe the guy's a nice guy. Maybe he's not a nice guy. Maybe he's a smart guy. Maybe he's a dumb guy. I have no idea. But I think what is unfortunate is that he gets all these people jacked up, or whatever his post got all these people jacked up to go back into GameStop and so forth. And what happened since then? The stock has utterly collapsed. So a lot of people have lost money. And I know this because I have a trading school and people are contacting me being like, dude, I lost so much money. What should I do? Well, my answer is forget the news, forget the media, forget the hoopla. Understand market dynamics, right? If everyone and their Aunt Mary and their cousin, whoever, whatever, what it was Biden, the uncle that got eaten by cannibals, Uncle Bo or whatever. Um, you, you know, if everyone and their who wants to buy a stock buys a stock, what happens? The market runs out of buyers. When that last person buys the last share they want to buy, the only place it can go is down. And that's exactly what happened here. Now, a lot of people talk about, oh, the hedge funds try to manipulate this stuff, market makers, blah, blah, blah. All right, guess what? I was the head of trading at three different institutional money managers, and we had various hedge funds. I oversaw the trading of, I don't know, probably 12 or 15 different hedge funds over those years. Some are really complicated, long, short, derivatives, blah, 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 blah. Some are very basic, long, buy and hold value. The difference between a hedge fund and a regular fund is the fee structure. It's how much people get paid. Hedge fund traders are not out there thinking, like, how am I going to rip off the little guy? Market makers are not out there thinking, how am I going to rip off the little guy? If you think about it, who do hedge funds manage money for? Manage money for pension plans. Who is in pension plans? The little guy. Hedge funds manage money for the little guy. I know it's quite amazing. But despite all the hoopla, let's see some basic market principles. This thing jacked up. Where did it find resistance? A level that was resistance before. Okay. Markets that or when markets get back to a level that was resistance before, they tend to find resistance again. And that's because there's people who bought at this resistance who regret doing so when the price fell out of bed, like within a day or two. In this case, it was within a day or two. So a lot of these people say, if it ever gets back to my price, I'm going to sell and get out of break even. So we rally back to a level that was a peak or resistance. What happens? We find resistance again. You can see it right here. See resistance here, resistance here. The opposite happens with support. People sell, then the price rallies, and they're like, I shouldn't have sold. If it ever gets back to my price, I'm going to buy my shares back if I can get them at the same price I sold them at. So remorseful sellers placing buy orders creates support at a level that was support before. So my belief is that in any chart, there is probably in the history of mankind, or at least since markets have traded, there is um, the same principles repeat over and over and over. I mean, look at this. Look how overbought GameStop was at that peak there. When something is really overbought, what does it mean? It means like, all right, well, people are like ripping it higher. That's going to draw sellers into the market because they know that, oh man, eventually this thing is going to revert to the mean. A lot of Wall Street strategies are based on reversion to the mean. The last time the stock was as overbought as it is now, or this trade is over, by the way, unless if someone else comes out and hypes it, if there's, fuzzy navel or, whatever, crooked dragon, I don't know who the hell the next guy's going to be. It's going to jack up. It's going to come down. I could like almost guarantee it. It's one of the easiest trades that I've ever seen in my long time on Wall Street. Now, let me talk about the way a hedge fund would play this. First of all, hedge funds don't just go out and be like, oh, let's just trade one stock. A hedge fund trader probably has 20 or 30 different positions at a given time. And they're probably not going to pay attention to something like this. And they're probably not going to pay attention to the retail community because they don't give a rat's ass. When I was a market maker, I didn't even know about the retail community. No one ever thought about it because the retail orders that come in, they're so small, they just get thrown into the system. The main job of a market maker is to work, get good executions for your institutional clients. So listen, if you've lost money, it's a great learning experience. All right. Hopefully, it teaches you that this requires a little bit of skill and a little bit of savvy. And if you can get it, it can be a very profitable strategy or way to make money. But if you're just going to guess, if you're just going to listen to some dude in whatever YouTube or some social media thing that I'm too old to even know, you're going to lose money. So anyway, just check out my videos. I'm not lying, right? I mean, I'm not lying. I'm not sitting here self promoting myself. I mean, I guess I am kind of subtly, but it's because I want to teach people. I get really angry in a lot of ways when I see nice people lose a lot of money because they get bad advice. Sometimes that bad advice is someone who's really trying hard, but they just don't have the experience or the understanding. But sometimes that bad advice is someone who's just like, crooked and they don't mind ripping people off. See that a lot in the crypto community. All right, so that's GameStop. Now let's just go look over here at SPY. I mean, this thing has gone nowhere. It's slowly working its way higher, which is good. Slow up is good because if it goes up too fast, it reverses. This is nice, healthy action. The big thing to watch, I think, over the next few days or a week or so is the action in the financial sector. If this financial sector, which is the second biggest sector after technology, starts to break this resistance and move higher, that's going to be a sign that the broader market is going to move higher. But if it rolls over and goes down, it's probably going to take the broader market with it. Different sectors are in the driver's seat at different times. Sometimes it's technology, sometimes it's industrials, sometimes it's whatever, consumer discretionary. If there was one thing I would focus on now to get an idea of what the broader market is going to do, it would be right here in this financial sector. If this doesn't break through and rolls over, remember, resistance is a lot of people want to sell. If they start undercutting each other and goes lower, there's going to be money to be made on the short side or in the inverse financial ETFs. You don't need to be an options trader. Look at FSZ, FAS. It's an inverse financial sector ETF. The financial sector goes down 2%, FAS is going to be up 6% roughly. All right, everyone, make sure you please check back in, especially if you've lost money, because, I don't know, maybe you're a lost cause, but I would certainly like to have the opportunity to teach you how to not lose money. All right, everybody, thanks so much, and I hope to see you soon.